Hello, and welcome to the first ever episode of the Wizard's Lair. Um, if you have any name suggestions for that, that is still a work in progress. Drop that in the chat. But essentially, this is the series where I sit down with some of my friends within the trading crypto space, get to know a little bit about them, their journey into this space, and essentially go through their experiences and what some of those who are new to the industry or anyone really who can learn and take from that. So first, a disclaimer is none of this is financial advice. Neither Justin nor I are financial advisors, no matter how much we might pretend to be. And we cannot be held responsible for any losses you may incur. So with that out of the way, I would like to introduce my friend Justin. How are you?
Very well, sir, and good morning. Yeah, all good. Just exciting times we're living in, right?
Yeah, exactly. For those who may or may not have met Justin, Justin is one of my friends from the industry. So I think we met for the first time initially online through Crypto Saving Expert, and then met for the first time in person at the Solana Hacker House, and then again at Zebu. Very fond memories of drinking whiskey and sushi samba at 2 o'clock in the morning.
Exactly. The way all good meetings should be.
So who do we have in the chat? So we have Peter Finnegan. Hello. You're going to make me blush by calling me beautiful. We have Lee, and we have the legend that is Mr. Block Pro.
Yeah.
Hello and welcome. Thank you for joining us on this Friday morning. So I guess straight into it, really. It's great to have you on, Justin. And I think for those who probably haven't met you or haven't spoken to you, it would be good to learn a little bit about you and your background and what's brought you into the sphere of crypto and trading.
That's one way of calling it, sphere. There are other things you could describe it as in the current plight that we find ourselves, but it's an interesting space. Some very good people. Can be a very lonely space, is what I would say. Unless you find yourself in a decent community, you can be left kind of, especially with the way the market is at the moment, you can be left scratching your head and probably rocking in the corner somewhere. And even if with a good community, you probably got that as well, to be fair, because of the way the market's been. But so I think the communities that some of us are fortunate to be part of definitely helps, and would very much encourage anyone to. I'm not going to plug anyone in particular, but it's that there are get yourself with like-minded people you can learn from, because it can be a cruel, lonely place. Very cruel, lonely place. So
yeah, I couldn't agree more. I think that's one of the, sort of my big takeouts is almost sort of, as you say, a lonely place, but it's finding people who sort of get exactly what you're going through. So the everyday person on the street, or even sort of the friends you have around you, probably can't relate to a lot of sort of the stresses and turbulence going through, both in trading, but also from holding these crypto assets that can go up and down 20% in a day. It takes a certain disposition of person to hold those.
Yeah, it's volatile, to say the least. But hopefully, whilst there is pain and suffering at times, there's not many asset classes that you can be involved with where you can genuinely, shall I say, outperform indexes and inflation and whatnot. So if you're gonna, especially there's a lot of people that will never be able to get into the big ticket items and not have either not through capital or not having the contacts to get into the traditional finance space and into some of the seed round investment stuff. You'll never get that. So by the time it then goes into floats on the main exchange or whatnot, then you're effectively, yes, you can still ride and get some decent returns, but effectively you're becoming part of the exit liquidity at that point. Whereas crypto, genuinely, you can outperform general growth of, say, inflation. And I think is people look at inflation, but they don't understand the debasement of currency as well. So people go, okay, right, as long as I'm doing better than 2% a year or whatever it is, then I'm actually winning. But okay, right, you can go to banks, you can go to the S&P or whatever it may be and get 10%. You go, well, I'm beating inflation. But debasement of currency is probably 6% a year as well. So 6 plus the 2, if you're getting 5, you're actually still losing. And it takes a long time to kind of understand those kind of little nuances, and unless you get it or put a lot of effort into learning how the world works, you can be left quite exposed. Whereas genuinely, crypto is an absolute, let's put this in a polite way, it can mess with your mind, body and soul. And there are, 11, especially with the likes of Pump Fun and some of those platforms, the amount of projects that Joe Public can get into is over 11 million now. 11 million divided by 3 trillion or whatever it is, the market, or 2.5 trillion market cap. It's not that much, really, considering how much Bitcoin takes.
It's crazy, isn't it? It's like we had that chart that I saw where I think it was 6 years ago, it was $1.8 million of liquidity per token. Or per crypto that was in existence, and that's now fallen to about $4,000 of liquidity per token, which I think shows that the state of the industry that we find ourselves in.
It's tricky, but again, being part of doing your research, being part of a community, and having contacts with some semi-intelligent people, and then people that actually know what a good project is, because you can research it as much as you want. If the right people are not backing it, the VCs, and you're hearing about it at one point, then you're probably going to be the exit liquidity. And so it's a very the beauty of obviously crypto is unregulated. It's the thing of the people, but then you've got the issue with then people will look after themselves, what they should do, and it's dog eat dog world. So you really, really, really need to have your wits about you. You need to have solid people you deal with, and then you can pick your way through it, and you genuinely can outperform and change your life. And that is the upside of it. That's from an investment side. From a trading side, challenging, especially with the lack of liquidity. Like you say, it's just it doesn't take much to get your backside handed to you pretty badly, and obviously we bear witness to that every single day.
Yeah, I agree. And I think as well, you've got obviously the way that a lot of the crypto trading is set up, and that the access that retail investors have to what is quite substantial amounts of leverage available to them for assets which are naturally volatile anyway. I think if you wanted to go and trade 100, if you wanted to go trade even 20x on a single stock, you likely wouldn't be able to do it as your average retail investor. It's capped around sort of 5 and 10.
Yeah.
So the idea that you can go and leverage 50x on Fartcoin that moves 25% 25% in each direction every day is both an opportunity, but also that presents a risk, which obviously we know quite a lot of novice investors come in, and it's where you can make money quickly, you can also lose money very quickly. And I think, as you say, that having that system around to really learn and guide is really important. It can be quite lonely and daunting, particularly for those new in, and there's a lot of noise that surrounds it. Everyone's got an opinion, but everyone's got an angle, and there's different motives behind the angle, whether it be financial, whether it be clout. It's being able to filter through that noise, and having that system around really helps.
With social media, it's very easy to sell the dream, right? Of going Lambo tomorrow, which is obviously a classic one, and then lots of people on the social influencers that make it sound super easy. Sign up here. This referral link for this referral link for that. You can make a couple $100 a day, blah, 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 blah. And there are some that I go, right, I actually respect their honesty. But my general filter for these, if you've got people going, if you sign up here, you can earn $200 a day. If you're that good as a trader, or these influencers that are bragging about making $200 or $500 a day, you're not really that good if you're bragging about basically what I probably pay in fees on one trade is what they're bragging about as profits, and it's just like, come on. But I get why they do it, because they're targeting a specific kind of audience. So there is that sharkish mentality out there. And it isn't easy. You're trading, whether you're trading traditional finance or crypto, and I'm talking about trading, you're betting against big banks, institutions, people with very, very deep pockets. They don't need stop losses. They have quite, not infinite margin, but they've got a lot. You're competing against that, and it's not easy. Same as it's not easy going to a casino and winning consistently, because the house always wins. And I think a lot of people just don't understand that very concept. They go, right, this is going to be a piece, this is going to be a walk in the park, and it's not. If you go into a casino and you go, there's two analogies I'll use. If you go into a casino and you go, right, I've got $100 in my pocket and I'm going to bet $20 a hand, you're probably not going to have much fun, and you're not going to be playing for very long. Whereas if you go in and bet $1 a hand, you could play for hours. So it's very similar to like crypto or trading in general, and obviously Block Pro's in here, who is a demigod and someone that we all listen to, and preaches about risk management. If you manage risk, you get to play a lot longer. Yes, it's not Lambo tomorrow, but probably if you do it right, you can probably buy a fleet of Lambos down the line, rather than being completely washed out of the system. So that's one analogy, casino-wise. And then the second one is, if you go into a casino and you go, I've got no plan, I'm just here to have fun. Great, you might have fun, but eventually, the longer you play, you will lose. If you go with a plan that's well thought about, well executed, emotionless, and it's not meant to be fun, you can beat the house. The house don't like it, but you can win. And that's the same as trading. If you have no plan, you're basically gambling for fun. That's it. And again, what Mr. Block Pro will preach is a very similar thing. And I think those two analogies is something that people should have written down and drilled into their brains and kind of go, what are you trying to get out of this? If you want to have fun, you're in the wrong game. You might be in the right game, but ultimately you're going to lose. Whereas emotionless, plan, and just do a job, treat it like a business, then you can win. But even then, it's still hard.
It's all about leveraging that asymmetric advantage you have. I think if you liken it to financial markets, if you're talking about stocks, if you're talking about bonds, you're essentially competing not only against some of the retail investors, but on the institutional side, you're competing against people who have access to information that you'll never get through because it's on their $300,000 a year Bloomberg terminals. It's that, how do you leverage your asymmetric advantage? And I guess a lot of that from a retail perspective is your asymmetric advantages, your strategy, and your ability to spot a trade in that particular moment that has a higher than normal probability of coming off. And it's being able to identify those, but also then having the discipline to not overtrade.
Yeah. Yeah, it's like I say, it's not easy. It's really, really, really stacked against you. And again, the problem with crypto, if you're talking about trading versus traditional finance, you've got a plethora of information that's available to you. Case in point, heat maps, all the books that you can see online, blah. Who owns these platforms that allow you to kind of see all this information? If that information is being shared, then obviously all the banks and institutions also know where people are going to go, this is where they're going to target. Or the order books and the heat maps are stacked to induce people. And don't get me wrong, they can be used in confluence with the rest of your TA, but I think a lot of it is just utter nonsense, and it's just there to lure people in, and you see people talk about it all the time, and it's just rubbish. And if you use it on its own, and it's stacked against retail big time.
Yeah, and especially I guess if you look at sort of the trajectory of the finance and trading industry as a whole, and we're seeing more and more on the algorithmic and the quant side and away from sort of that human element. I think if you look at investment banking now, the amount of volume that goes through in-person traders is dropping compared to that of some of the science quant programs that they're running. Yeah. And as you sort of say, that ability to digest information and make use of it we're getting to a point where there's so much information that goes in that the human mind can't process it anywhere near as quickly as potentially some of these sort of artificial quant systems.
Yeah. But the thing is, you can see, and again, where having spent some time with Block Pro and some other very good traders and people that know what they're talking about, if you put the effort in, you can see no indicators, no anything. You can look at the candlesticks and go, what is being traded by the computers and the algorithms, and where the big kind of buys come in, which is then the human element of where they go, right, we're going to send this now. And you can see it in the formations of how candles react. And again, if people are going to trade, use whatever resources you want to use. That's absolutely fine. And I personally don't use indicators. For the most part, I look at what I can see with my own eyes, because most indicators only draw the information from the charts anyway. See what you can see, and then try and build a picture. And then you can kind of go, right, is there any other confluences I can throw in? If you cannot read a basic candle, and it's not candlestick patterns, that's a bull flag, and I mean actually the candlesticks of how the bodies form, the wicks are formed. how they're shaped. If you cannot do that, you're going to be struggling to understand how price action works and who's doing what at any given time.
Yeah, it's certainly a skill that takes a lot of mastering, and one that I think we all are continually learning. I think just drawing on that in terms of your journey into trading. So how did that occur? Were you always a trader? Was it a skill you decided to learn?
Well, it depends how far you want to go back. But long story short, I worked in finance in the city of London for 24 years. I had a couple of businesses that I'd set up, nothing major, just like some other bits and pieces that I'd set up, investment wise, or buying houses and stuff like that. And I had always been an investor in the stock market or whatever it may be. My first experience of buying into crypto was a bit late. Managed to buy pretty much near the top of, or round about the top of 2021. So, but most of my investment side of things, my time horizon isn't 5 minutes. It's generally buying stuff that I think has got room to grow over a longer period of time. So I'm not looking for, don't get me wrong, there are things that you go, right, this might be a short-term win. Mm. There are, but generally speaking, if you sit on an asset long enough, if it's sound, then you should do it right. So I really started going a bit heavier during COVID. So when suddenly blue chip major companies were suddenly valued at 50% less than they was 2 days ago. To me, that's a pretty sound investment of going, I'm basically getting a stock at half price. This is an easy 2x. Or if they've gone down even more. So that's where I really started rotating in. Like say my crypto holdings were slightly compromised from when I first invested, but lesson learned. And then, cut a long story short, I'd done okay in the city, and I was able to exit the city and not have to have a real job anymore. 2 years ago, 2.5 years ago, and I decided that I needed to have 6 to 8 months of non-working just to get over the PTSD of doing 5 a.m. till midnight most days. Used to call it 25/8 rather 25. Yeah. So I never had a day off. I worked a lot, so I needed that kind of time to recalibrate and get my brain back into gear, which enabled me to just chill out a bit. And then I was like, I'm going to need something to do because I'm not that old and I've got a brain that's pretty okay. I suppose that I was terrible at school, but I've got much better at learning in my later years. But even in my old job, I was one of my better skills, shall I say, is I was good at joining the dots up on a macro level of what it all means. So I had an understanding of finance anyway, and the stock market, and just how economies and politics and everything were intertwined and worked, which is why it's obviously at the moment quite funny. So I decided to get into day trading after watching, like most people get in by watching some interesting people on YouTube and stuff like that. So I met a few people, so like Peter, who's in the chat, and Reese and Lee in a group that was selling the dream of a course and whatnot, who is one of these people that I now have come to realise that is bragging about making $300-400 trades is not a very good trader and should never have signed up for, but live and learn. And met some couple of now good friends off the back of it. And so I started day trading, and a lot of that was with Elliott Wave and all of that kind of fantastic stuff. I realised after a not too long period of being in that group and doing all the learning and stuff like that the mods and the people that were teaching it were absolutely full of shite and couldn't trade whatsoever. So I, at that point, had learned that support and resistance and levels were much more important than Elliott Wave. And yeah, it got quite interesting. So I was gone down a slightly different path from what that kind of group was teaching. And subsequently, so I had a little breakaway group that were all working together and trying to make sense of the world of trading crypto. And I had a bit of a falling out with the powers that be at that particular group because they started going, tell us what you're doing, and I said no. And then they offered to pay me, and I still said no. And then they booted a whole group of people out. That was anyone that was basically associated with me, all got kicked out, which is quite funny. So we found, set up our own little thing, so like have a little chatting and try and continue our learnings. And then I'd seen that Martini guy on YouTube and decided to join the newly formed CSE at the time. Then I realised what trading was about, and was very fortunate to meet some unbelievable traders and now subsequent friends off the back of it. So obviously Block Pro, Christian, and then obviously a whole bunch of other people to meet off the back of it. And obviously we've done a few events together and met people in person. But my learning curve at that point went kind of parabolic of, right, okay, there's a whole brave new world out there. And it's a lot simpler than trying to project something that's that's very spurious and subjective, which Elliott Wave is. So obviously when Block Pro was very kind with his time and explaining a bit more about how price action works, and done my own research and learnings, and I can't tell you exactly what I've learned. I've just read or learned various things, and then going back to my previous existence, joining the dots up of how it all works and how institutional money works and money flow works, and kind of formed my own style of how I do it. And I think as well, taking some accountability and exposing myself by going, right, I am going to say, right, I'm going to take this trade, or this is what I'm looking at, and actually posting ideas to a wider group. That way because again, a lot of people tend to post their wins and not necessarily admit their losses. So they could be going, you're thinking someone's doing great and posting win after win, but not saying the other 9 out of 10 trades they're actually losing. So having that more accountability helped me, and obviously likes of Dave, who does the Stonksy stuff, very good trader as well, very good at TA. And there was just that nice little group of people that all kind of come together, and we, I think it elevated everyone collectively. And I'm a very competitive person, very, very competitive person. So I want to be the best version of myself that I can be in anything I do. I'm not a bad loser, but I want to be, and I want to be as best as I can be. And I like leading by example as well. And I'm quite happy to take on that role to try and help people where I can. So there's a good group of people and a good community that we all have, and obviously you and me are part of that everyone drives one another on, and whether that is general day trading, whether that is investing, whether that is putting together Bitcoins or whatever it is, the lovely Solana season. It's good because would we have done that? Really, that came off the back of meeting up a few times, right? And then collectively, then a few of us in. Obviously, it weren't my idea to come up with it, but then to be able to help with some of the market making or whatever we need to do in the background. That was fun, and that's good. And it's good to do things. It's good winning. Winning as a team is better. So that's been a brilliant part of it. I've really enjoyed being part of the team almost, and kind of having that connectivity with people and that driving of one another to improve and get better. And I mean, at the moment, I'm pretty much not trading crypto, even though I was a massive crypto maxi trading person. The dynamics in the market, you can keep hitting your head against the wall, or you can go, okay, right, what else is there out there? How can I utilize my time as efficiently as possible and as profitably as possible? And having the intellect to go, actually, this is not working, or not necessarily not working, but there are better things to do out there with your time. I think that's so that there's a few of us that predominantly gone to trade traditional finance, so very much gold maxi trading now, along with forex and sometimes oil and stuff like that. And I will set myself little challenges at the time, so I have loaded up another little bit of money that I'll put into a maxi account just to kind of, because I had a bit of money in there, to trade just Bitcoin again and just have a bit of fun. Again, akin very much to what Block Pro used to do in CSE, where we would go, right, I'm going to start with some stupid amount, like $10, and going to make it into like 100 grand or something. So it's knowing sometimes to go, right, understanding the bigger world, understanding where liquidity sits. In hindsight, trying to scalp or day trade small cap coins or mid cap coins is just stupid, because like you were saying earlier, the moves are so violent and large. Unless you've got like a 20% stop loss, you can get wicked out in one candle. Whereas a lot of the time, like when I trade forex, like your percentage stop loss might be 0.006% or something like that, but it's fine because the most liquid asset or the liquid pair that there probably is Euro USD, and you can afford to have a much smaller percentage, but you're not going to get the violent swings unless you've got big news events. So it's having the intellect to kind of go, okay, right, where does this sit? So my general rule of thumb now is the higher the liquidity of the asset, the lower the time frame I'll trade it. So I'll quite happily scalp stuff in the 1 minute. If it's gold or euro, US dollar, because you can afford to do it because it's so highly liquid. If you try and do that on Fartcoin, you might be slightly compromised. So I think that's something again people should realise. And for me, cryptos are great, potentially, hopefully, God willing, is a great investment where you can outperform. Probably during the bull market, and especially how the market is now, probably not the best asset class to trade. And there are much better returns to be had in other asset classes. I mean, when I'm trading gold, generally speaking, my average daily account growth is, worst days probably a 5%, but most days is 10+%, and that's account growth every single day. And the trades are quick. You've got no overnight trades. You've got no weekends to worry about. You can kind of actually go back to having some normality of some kind of pattern to your life.
You can go to sleep. You can go to sleep without having to worry about a big orange man in the USA saying something in a press conference. But,
well, the thing is, as well, obviously there are correlated pairs and items that go together, whether it's forex, whether it's metals, or whatever it may be. But crypto, you can be trading a pair or a ticker, and Bitcoin can suddenly go scatty over some reason whatsoever, and you're then taking that trade. So you've got extra variables that you need to take into account, and that's where I think most people need to really, if you can't trade Bitcoin, do not trade altcoins. No. That's my advice, is learn to trade Bitcoin. If you cannot trade Bitcoin, you will not be able to trade altcoins.
Yeah, and I think it's finding those almost alternate assets. I know I'm sort of in a similar boat. I've got very sort of, I wouldn't say sick of trading crypto, but it's moving in a way which feels a lot more unnatural. So I've had quite a lot of fun just trading sort of, I wouldn't say obscure assets, but ones which are quite amusing. So I've been, over the last couple of weeks, I've been trading things like orange juice, chocolate, which is quite funny. I mean, it's volatile. I mean, chocolate was up 10% in a day, but it's almost sort of learning to trade those other asset classes. I think sort of my COVID experience, I did quite a lot of spot trading on natural gas. Yep. And so you almost look at a different lens of that, in terms of you've got the macro lens of what potential gas consumption is, but also sort of that weather overlay. And I think certainly in some of the orange juice and the chocolate, you have obviously that weather element plays quite a strong element. But it ultimately, and I say this, I think a lot of cryptos exist only to be a volatile asset that people can have fun trading. And ultimately, I think you have to be, whilst there is a lot of stuff that holds some value, I think from an investment point of view, you also have to be wary that a lot of these things trade on what is quite mammoth valuations, especially when you look at it from if you come from a stock background, for instance, you've got these cryptos that are trading at price earnings ratios that are probably in the thousands.
Yep.
And being able to almost, I guess, understand what the value of that thing is and what the speculative value of it could get to. But ultimately, I think it's a case of understanding risk and taking what you can out of the trade. I think people, I think the one advice I'd give to anyone sort of getting into crypto or trading is you have two buttons. You have a buy and sell. And on the whole, and I think a lot of the people that certainly we know in the space, you tend to have a lot more success on that red button than you do on the green button.
Yeah.
And being able to sort of take the emotion out of it and being happy to hit that short button. I know our friend Mr. Block Pro is pretty much an exclusively short trader.
Yeah. I think it's the thing is you've got to, if you just look at it in the most simplest terms, it takes a lot more to add to an asset monetary wise to move it upwards, and it's a lot easier to take that away. And that's basically it, and that's why generally shorts move much quicker than longs. And I mean, I'm pretty agnostic about whether I'm long or short. I don't really care, and especially I'd say trading traditional assets. It's if it hits a point of interest and the market structure's right, I don't care which direction it's going to trade. I'd say most of my trading, say 90% of my trading is gold. So I'm just looking at James's question there.
Yeah.
Gold is a brilliant asset to trade. You've got one ticket to trade. You can learn the price action and how it moves. And this goes for any ticker whatsoever, by the way. But I would say gold, because it's got enough volatility to actually bring some excitement and actually get some decent pip moves. But it's also readable enough where you are not just going to get absolutely trousered every time. So, but it doesn't really, unless it's something with zero intrinsic value and manufactured price action. Charts do not lie. Charts do not lie. And price will always go to where price needs to go to. So all of this stuff that's going on with the tariff stuff at the moment. What is it? A perfect, all of those massive hedge funds and whatnot, what's it allowed them to do? Bank profit. That they've pushed, they've invested, they've pushed the prices up, and now this narrative has been allowed them to take profit. That will sell off. That will get to a point where they go, okay, I'm back risk on again, and then they'll buy back in again. But the price will go back down to the next level of support. That's a fact. And it's obviously looking at the S&P at the moment, for example. It literally is hit bang on my retest point this morning of where I was looking for. It's pulled back 12, 13%. Anything above 20 is deemed then a crash. So we are now between that 10 and 20%, we're in corrective territory. It's going to form a base at some point, or it's over, and we're going to have a massive market correction, and that means that Bitcoin and everything else will go down with it. So there is a balancing act, and again, just understanding the big wide world out there. Crypto is great. Again, like I say, it can generally outperform most asset classes. However, crypto is in a cycle, but it's not in an independent cycle. Crypto is part of the wider economic cycle, which all ties into the rotation of capital from bonds to gold to stocks to crypto. It's all intrinsically linked. And if you are an investor, you need to understand, or you don't need to, you can do what you want, but I would recommend learning a bit more about how the actual macro economic cycles works, which also coincide with presidential cycles. And when people, it's all this big kind of train that kind of works completely together. And again, you don't have to do this. You can quite happily just sit there as ignorance is bliss. I personally like to understand the why and how, rather than just I'm going to concentrate on this little micro element. But that's the way my brain works. It's each to it. But again, if you surround yourself with like-minded people, then how much when we're talking with, whether it's with Lisley, whether it's with yourself, Christian, Block Pro, how much do we actually talk about specific tickets that's going to go up and down here? Most of the time, it's what's going on bigger picture-wise. Because that's what really, well, actually, most of the time it's probably talking nonsense. There's nothing to do with trading whatsoever. Everything else is really more about the bigger picture. And then you can drill into, you can understand the foibles that then are affecting the micro element, which might be Bitcoin for that particular day.
Yeah, I agree. And I think certainly that macro lens and the business cycle it's something that I really like. I sort of come from, I was very into my economics growing up and still am to an extent. I think sort of having that view of the world is really interesting. And definitely something I think I'd love to have you on to do a video to really sort of talk and explain that. I think that would be beneficial, because I think understanding the way the economy works and how it impacts you, not only from a trading point of view, but also from a day-to-day perspective. Like anything you buy at a shop is intrinsically linked to the economic cycle. The bills you pay at home is exactly sort of why in that intrinsic economic macro sense.
Like we said at the start, the people look at inflation, real easy, tangible things that people look at inflation or whatever it may be and go, right, as long as I've got my 2% pay rise and I'm in line with inflation, or whatever it may be, if you're how many people genuinely even heard of, let alone understand debasement of currency? 99% of people wouldn't have a clue about it whatsoever. And if you showed people on a chart and went, well, actually, your pound that you've just earned and you've now get £1.2, it's not, you're still going to, people keep going, things cost more supermarket, or things cost more to go and buy some clothes or whatever it may be. It's because mostly it's not inflation, it's mostly debasement, because that's what's driving the very value of your fiat currency is going to shit, basically. Pardon my language. I think it's, if you look at the value of the US dollar versus the S&P 500, it's lost something like 90% of its value in the last 100 years. And then you go, well, some other fiat currencies around the world have then lost 90% of its value versus the US dollar. You go, geez, in some countries you can see why people are looking for a new path and moving away from their traditional fiat currency that's in their country. So whether you're Argentine peso, whether you're looking at Turkish lira or whatever, they've got to do something, because tariffs aside, it's nothing compared to how much value their own currency has lost.
Yeah, and I think I always say this too. I think you sort of have, and I guess there's a general naivety certainly in the West and these developed countries about that inflation. I think no one had really experienced that sort of rapid inflationary spike and the debasement. But then you look at sort of why crypto exists, and there was always the joke about Zimbabwe and the amount of millionaires to buy a banana in whatever. It's that sort of debasement, and you see the real effects of it. Argentina is a prime example. I went to Turkey a couple of years ago and used 21 notes to buy a £2 bottle of water in an airport. It's that sort of real effect, and I think
and that's real life, right? That is genuinely affecting people every single day. And it's again, I don't think people understand, but I do think that's where we are on the verge of change, because we're going back to the whole crypto thing that you was talking about, and the inflated valuations and stuff like that. It's great, and you go to these events and everyone talks about how great crypto is and blah, blah, blah. It's going to solve this real world problem and it's going to fit in here and that. How many people genuinely use crypto day to day, where it's actually taken over the fiat or whatever it is, the real world I am using this? And we're not there yet. It's happening and it's integrating, but it hasn't got to the point where it's had mass adoption. So I do genuinely think, from an investment standpoint and conceptually as a new asset class, we're still so early into what it can and will ultimately do. But at the moment, it's not really been adopted and it's not really being used. But I do think with a lot of the stuff that's going on with tariffs and looking at how much the value of the dollar is being crushed, and then you look at, right, why are they doing this? And, well, in my humble opinion, the pertinent facts, the US have got 7 or 9 trillion of government bonds that expire this year. If you look at the price of the bonds 10 years ago versus what they are now, you're basically paying double on the yield, which obviously double on the yield over 7 or 9 trillion, quite a lot of premium that you're being charged. So that's why they're trying to devalue the dollar. And you look at the bond prices. Obviously, we've talked about it. They're not getting crushed, but they're definitely coming down.
They're getting to interesting levels. I think that was one of the things that I was speaking to you about. Is it's getting to that bit where it's the warning sign. I think certainly the gilts are getting to a level where they were in 2007, and I think everyone was sort of aware of what that level of debt did to not only to the financial system, but the impact that had on the everyday person. There was obviously people losing homes, people losing jobs because debt got to that level, and we're not far off that level again.
Well, the thing, the bigger picture, even outside of that's just facts of what the US are trying to do at the moment, or the challenges that they are facing as a nation. But in general, personal, company, sovereign debt is at unprecedented levels, and it's unserviceable at some point. And you can only kick the can down the road so long before a massive correction comes. And obviously we saw that with the housing market in 2008. Big correction. But that was an element of the financial world. But you always had the backstop, which was the sovereign side. The sovereign debt, you look at the debt ceiling of what's happened to the US in the last 20 years, 30 years, it's gone parabolic. At some point, they are not going to make their GDP is not going to be enough to service just the debt. And so then what happens? You get the rating agencies pull their rating as a nation. Then the actual penalties that they then have to pay on those bonds go up, and ultimately they default. The US defaults. Every country in the world defaults. Every country in the world defaults. Every person on this planet defaults, and it all goes to pot. And that's not being over the top. That's facts. That will happen. And if something doesn't happen or didn't happen, I think 5 to 10 years tops, the US would have defaulted. And again, we talked about this probably pre-election and stuff like that. That there was no choice. It had to be Donald J. Trump. And personally, I still say everyone thinks that Trump is a meme coin and stuff like that. Something's going to happen with blockchain, with crypto or digital assets, with the US, and it's going to be not necessarily a hedge, but it's going to start being integrated into mainstream, because whereas fiat is inflationary and it continues to add debt, the inverse of that is crypto. And so it's needed to recalibrate the world's financial issues. Again, in my personal opinion, anyway. And you just listen to some of the little sound bites of transparency, looking at all that kind of stuff. And I think this is where a lot of the stuff that the US are doing is to do with this whole new financial system. I think it's all, there's the debt that they've got to service for what they've got to do, and then you've got what does that lead into next? And yeah, I think it's Trump and Musk are basically running the US. I said to you the other day, they're not running it as politicians; they're running it as a CEO, basically. And my way of looking at it is, if you've got a company, there's two ways to make it profitable or improve the bottom line. You increase the top line, which is tariffs, investment in the country and stuff like that. And then you've got cut costs, which is Doge. That's the two. That's basically the long and short of what the US are doing at the moment. Again, in my opinion, that's how they're approaching it.
Yeah, it's almost sort of, yeah, I think as you mentioned that escaping potentially a sovereign wealth crisis, and I think there are some on the horizon, and I think as you say, obviously blockchain is a hedge against that, whether it be Bitcoin, but also I think the stablecoin angle is really interesting, because it feels again like a little bit of an ability for America to expand its influence and almost sort of erode some of the sovereignty of other nations, in the fact that if we do see things like USDT and USDC become more mainstream across these different countries, it almost sort of erodes that sovereignty of say a Turkey and their currency, which is, it's both a blessing and a curse, because as we know, Turkey is incredibly mismanaged economically. To put it very lightly, apologies to any, I would say apologies actually, I think any Turkish people in the chat are probably already having exposure to the dollar, and if they aren't, then
yeah. But that's why I think something like over 50-60% of Turkish people have cryptocurrency, because their own fiat is just worth nothing. Yeah. And it's you can see it's happening. Obviously, El Salvador done the thing with Bitcoin. That's more of a reserve and a hedge against their own currency. But in the real world, you can't. It's too expensive to actually utilize Bitcoin to actually as a everyday trading mechanism. So yeah, the stables are going to be probably part of that. And Will there be another one outside the USDC and USDT? I'm pretty certain there will be a more of a governmental one or something that they can control or will.
Yeah, and I guess there's also the beauty, I guess, of tokenization is we see obviously USDT and USDC tokenizing the dollar and other currencies following suit. But there's also things that, like gold, for instance, you can have a tethered gold tokens, etc., which I guess takes us back 300 years back to the days of the gold standard, which some may argue was getting rid of the gold standard is why we ended up in this mess. So it feels potentially full circle.
You look back in the day, you put your money you put your gold in a bank, and then you got currencies trade off it, and it was 1 for 1. I think most banks now are leveraged 20, 30 times. That's why if everyone goes, right, I want my money out of the bank, well, they can't afford to do it because they've leveraged it by 20, 25 times. Kind of thing.
That fractional reserve.
So yeah, it's challenging, but I do, as much as crypto is the Wild West, I do think it has real world value and will be intrinsic to the success of how we get ourselves out of this issue.
Yeah, I agree. And I think, we're getting to that point now where it's almost a democratization as well. I look at it as so even sort of stable coins, for instance, is where you might deposit into a bank and you're getting 3% that they're paying you, but then the bank's taking that and taking a return on it by lending it out, and they're earning 6 or 7%.
Yeah.
The beauty of crypto is that it essentially allows you to almost sort of take back the sovereignty of the power of your money, whether that be earning through yields like that, whether it be investing in assets, but also that opening up that financial collateral element. I know we see obviously things like Aave, etc., which open up the ability to loan against your assets without having to sell them, which I think from a personal fairness element, we know that is how a lot of the super rich work, is that they take these collateralized loans against assets they own.
Yep.
And if the everyday person can have that in what is a permissionless point of view, if you wanted to do that with a house, you'd have to obviously get permission from a bank, and then you would pay the bank very handsomely for the privilege, whereas you could loan against your Bitcoin at 0.5% interest rate, free up the capital to really go and grow from there. I think that sort of democratization, certainly for me, is fairness. I think sort of taking back the sovereignty. That was, I think, the book I read that really sort of changed my perspective on that was a book called The Sovereign Individual, where it talks about how we're getting to a point where the nation state's role is weakening and diminishing, and they will try and hold on at all costs. And it's how you can exist from a sovereign perspective outside of that particular system. And the more people that come to crypto, and that sort of permissionless element of crypto, less about the speculative asset element, but more about that sort of permissionless, exactly what crypto was designed to do. It's
the thing is, you only have to look at the lovely Larry Fink that was pretty much opposed to it. These guys run the world, right? It's the Fidelities, BlackRocks, all of them that run the vanguards that run the world. They're the ones with trillions and trillions and trillions of assets, and they could literally rug pull any company that they wanted to. They've ridden this gravy train and supersized their influence in the world. Same as the Rothschilds and whoever else as history. They know that the train's going to come off the tracks, and they know that what who's got most. If the USD faltered, say everything went to pot, and we went back to trading sheep, goats, chickens, and whatnot. Who's got most to lose? It is the super wealthy, those huge asset managers. They are the key. They're the ones that are driving the bus, and they know, right, we need to adapt and evolve. We've taken fiat probably as far as it can go, and now we need to look at the next frontier, and that's why they have started opening these ETFs and getting their foot in the door and whatnot. Because, and will it be them that drive the stable coins and stuff like that? Maybe.
Yeah, it's certainly interesting, and I could talk about this all day with you. And I think certainly, judging by some of the chat, I think a macro masterclass would be incredibly beneficial. But I guess just to sort of wrap up everything we've covered, I think if I go back and we sort of talk about sort of the biggest advice you could give to somebody in summed up, what would you say?
Don't rush. Anyone that says Lambo tomorrow, anything like that, don't unfollow them. Or if you are going to follow them, use them to troll them people, because they're all liars. Really, the best way I can explain it is you've got to treat it, if you're going to trade or you're going to invest, treat it like a business. You do not start a business by just putting your finger in the air and going, I'm going to put some money in something. You don't start a business. You have to do research. You have to learn. You have to put a plan together. And you more than likely do not make money in your first year or even your first 2 years of your business. You've got to look at preserving capital, make a plan, and then do not deviate from the plan. Go down that path of learning, recording, like a science experiment. You don't just throw a load of stuff together and then go, woo, see what happens. You plan it, you do the experiment, you record your results, you then analyze the results, you then form a conclusion, and then you evolve, and then you do the whole process time and time again until you've got the result that you want. And people that suddenly go, right, I need to earn $500 a day or $1,000 a day or $100,000 a day. There's no such thing as an easy ride. There's no, the more effort you put in, the higher the chances, probability is that you're going to be successful. If you do not put the effort in to learn, in this case, it's learning and caring about what you're doing, you will not succeed. It's just going to fail miserably. And you need to learn. You need to put the effort in, test what you're doing. It's the same, again, launching a new product to market. You don't just go, I think the world is really going to like a new can of drink that you try with. You do market research. You see if it's got any important. You need to put the effort in, front load the effort, and 90% of the work that I do when I'm trading is done in advance. Once the trade hits my point of interest, it's then refining the entry and managing the trade. The last 10%, that's it. It's where the money's made, but that's the last 10%. Most people, it comes to a point when they go, right, we're going to do all the work now, and then so they don't know where they put an entry point in, but they haven't planned their stop loss, they haven't planned their take profits. And this is the same whether it's trading or investing. Always have a plan in advance of where does it become invalid? Where do I want to cut this trade? Where do I take profit from? All of this stuff, if you don't have that, you're going to lose, and you might as well save your money and put it in, I don't know, something else that's 2% yield. It's not easy, and you're trading against other people with far bigger resources, both financially, instruments that they can look at to actually judge stuff. You're trading against them, and every time you win, someone else is losing, and you just got to make sure that you're on the winning side and not on the losing side.
Yeah, I completely agree. No, thank you, Justin. Genuinely, I had a lot of fun, and I hope that everyone watching has learned something. And I'll be back next week with hopefully another guest on. But definitely, I think there's more to dig into from a macro side, Justin. That I think we can.
Just do a little round table. Get a few other people and do a little round table, maybe.
Yeah, that's a very good idea. I think we might have to call some of our friends and see what we can create from a magic circle. But absolutely. Thank you for your time, and thank you for everyone who was in the chat supporting obviously a first stream, and I think it went quite well. But let me know in the comments if it did. Like, subscribe, and all of that jazz, and and follow Justin. Follow Justin because he's a man that's full of knowledge, and I am sure
full of something.
Yeah, red wine. Oh dear. But yeah, thank you everyone, and have a lovely weekend. And as it says, don't get wrecked. Especially today. Today is probably going to be a very volatile day. I think we have Powell speaking, a load of other news, and I'm sure Trump will put out some tweets that will move the market. So be very careful, but embrace the opportunities, and I'll see you all next week.